Alphabet reported quarterly financial results after the markets closed on Tuesday, October 29th, 2024, that sent the stock price higher by as much as 4% in the moments following the release. Of course, I'm happy about that. I own Alphabet stock, and I've ranked Alphabet stock as my top rated stock to buy here in 2024. So in this video, I'm going to review for you the latest developments out of Alphabet, the key numbers to look out for, the key numbers to learn from out of Alphabet's financial results, and then finally I'll update my recommendation, my rating on Alphabet stock, and let you know if I still think it's the best stock to buy right now in 2024.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
I would say the biggest thing that investors were looking for from Alphabet is development of the artificial intelligence business and recognition of revenue. They've invested tens of billions of dollars in this category, and investors were impatiently waiting for those investments to turn into revenue. And I think we got a lot of that here from Alphabet in the cloud segment and how AI is helping its cloud segment accelerate revenue growth. The CEO saying that the momentum across the company is extraordinary. Our commitment to innovation, as well as our long term focus and investment in AI, are paying off, and consumers and partners are benefiting from our AI tools. In cloud, our AI solutions are helping drive deeper product adoption with existing customers. It's attracting new customers, and we're winning bigger deals from all customers overall. So that's precisely what investors wanted to hear from Alphabet, that the AI features and tools are resulting in more business. And we got that. And it's not just the CEO saying these words. I'm going to share with you the actual numbers in the cloud segment so we could see the tangible evidence of the company's success in this category. Overall, total revenue increased by 15% year over year to $88.27 billion dollars in the quarter that ended September 30th, 2024, compared to the same quarter last year. And not only is 15% revenue growth excellent for a company the size of Alphabet, but it's also accelerating revenue growth. The second derivative is now positive for Alphabet, going from 11% growth to 15% growth, increasing the rate of increase. Perhaps more impressively, the company's operating profit margin jumped from 28%, or to be precise, it was 27.8%, and it now rests at 32.3% in the recently completed quarter, or a total of $28.5 billion in operating income, which was up by more than $7 billion year over year. Not only the company increasing revenue, but also leading to more profits per dollar of revenue year over year. So I highlighted Alphabet has been my top rated stock to buy this year. It's performed reasonably well, $171 per share as of this recording. That's up from around $140 per share to start the year. And so it's been one of the better performing recommendations I've made. Of course, Nvidia being the most notable recommendation that's up significantly. Alphabet is doing well on its own here. And unsurprisingly, if I share with you the 1 day action, you can see after the earnings came out, the stock price jumping from $170 per share up closer to $180 per share. And I often get asked which shares do I like better, the GOOG or the GOOGL. I like the GOOGL shares better. The difference between these two are voting rights, and for investors like you and me, those don't carry much weight. We are not going to have enough shares to influence the company's board of directors in any way or to influence the company's management decisions in any way. So for us, the voting rights don't matter. So you just take the lower priced version of the company's shares, regardless of what voting rights those shares offer to investors. Another number I was looking out for from Alphabet is the total employee count. I wanted the company to remain disciplined in this regard. For years, they had been a little too loosey goosey with their spending, with their hiring. And in 2023, late 2022, early 2023, they implemented massive job cuts, tens of thousands of people, and billions of dollars in cost cuts for the company. And so I don't want them to face that challenge again where they overhire and then they have to go back and look at big cost cutting programs because those are expensive. You got to pay a lot of money for severance, let alone the difficulties you create for your employees and the decrease in morale when your employees are noticing layoffs and their friends and coworkers are getting laid off. So I was happy to see that they still have lower headcount. The number of employees in the same quarter last year was 182,381 thousand, and it's now 181,269. So still lower than the same quarter last year, and that's what I like to see. Even though lower employee count, revenue 15% higher. I love to see that company doing more with less people. That's great to see. That translates into more revenue per employee, more profit per employee. And as an investor, that's what you like to see. So, another thing I liked from Alphabet this year and for the last couple of years is that they're putting money to work. For years, they've held on to this massive cash balance, this hoard of cash that is way more than they needed. And I like to see it dwindling, or I like to see it reducing or decreasing, and the cash going into profitable opportunities. And I have seen that this year with Alphabet. As of December 31st, 2023, the company's cash and cash equivalents balance stood at $111 billion. That's how much cash they were just holding on to, just putting it into savings accounts essentially. But that's fallen from 110.9 down to 93.2 as of September 30th. So in the last 10 months, they've utilized 17.5 billion dollars, and that's gone into primarily property and equipment, and this is primarily data centers optimized for artificial intelligence or its AI capabilities. The property and equipment balance uh, net of depreciation increased from $134 billion dollars to $161 billion dollars. I like to see this from a company that's demonstrated skill in profitably deploying capital. Alphabet has done a reasonably good job in deploying capital. Their investments, their big investments, have been paying off. And the return on equity, the return on invested capital, the profit margin, all these key efficiency ratios are really strong for Alphabet. So I like to see them deploying capital. That's a reasonably good way to use this money. I think much better than letting it sit in savings accounts earning 4 or 5% if they're in, short-term government bonds, etc. I think they can generate a higher return on that investment by deploying it into areas of growth. And I like to see that. And I saw that again here in the latest quarter. This is also really good news for NVIDIA, right? Because when they're building AI data centers optimized for AI, Alphabet is one of NVIDIA's largest customers. They buy a lot of NVIDIA's GPU technology. So this could be good news for NVIDIA for those of you that are looking for clues from Alphabet about NVIDIA. I think the clues we got from Alphabet were really good so far. Now, I haven't heard or evaluated the conference call just yet, but what I saw from the company's asset increase and the areas of asset increase and the deployment of cash, I think is a good sign for NVIDIA stock investors. Alphabet stock is still trading at a relatively, or however way you want to compute this, it's undervalued in my opinion at a forward PE of less than 20. It's trading at a forward PE of 19.45 for the lower priced GOOGL shares, and I think that's a bargain. If you consider my discounted cash flow valuation for Alphabet stock, I have the intrinsic value per share at $238, and I did this DCF video on October 8th. And if you consider the current market price at $180 per share, it's undervalued according to my DCF calculation as well. So, regardless of the approach I take to Alphabet stock in the valuation approach, I come to the conclusion that it's significantly undervalued. And so I have the stock still rated as my top stock to buy now in 2024. And I updated that recommendation today, October 29th. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.